want a luxury car? How about two? How about if they're completely and utterly tax-free, and in fact, they make you a profit? Let's talk about 6% tax on £50,000. How about if you could do that? And finally, how about if you were saving so much money that you never had to worry about money ever again? These are the three secrets that I want to talk to you about. And I want to start right here, right now, with number one: assets versus liabilities. My wife Annika and myself learned this many, many years ago. Like most people in the UK, we had a car each. I mean, we had decent jobs and we're driving around in cars. Annika had an X5, which she loved, and I had an XC90. These two cars, we'd earned some money, we paid some tax, and then we went and bought the cars. I mean, that's what everybody does, isn't it? No. Turns out that's not what wealthy people do. So what did we do when we learned about that? We sold our cars. They were both relatively new-ish, and they were both depreciating like mad. So the XC90, when we bought it, was around £55,000, and the X5 was about £60,000. And as soon as you get in at the dealer and you turn it on, what kind of percentage do you lose? 20, 30? So 110 instantly becomes 80. And by the time we sold them, these two cars worth about 60 grand. Instead of two cars that are rusting away and depreciating on the drive, we've now got £60,000. What do we do with that £60,000? Well, we put it into something called an LLP, Limited Liability Partnership. And if you don't know what that is, you need to learn about it. Because this whole first section, secret number one, is about assets versus liabilities. Now, I'm sure you'd agree with me that a car is a liability for most people. It goes down, it costs you money, it goes down in value. A house or a flat, on the other hand, is an asset. It goes up in value and it gives you money if you don't live there. So what we did, we put these two into an LLP, and we split this £60,000 into two deposits of £30,000 each. Instead of two cars, we've now got two service accommodation units in an LLP that are making us £1,000 a month profit each. If you put a company car through a limited company, it's going to cost you a load of tax. If, on the other hand, you put a car through an LLP, zero tax. We are now allowed to claim the 100% lease cost and fuel and repairs and road tax and insurance and all that kind of stuff through the LLP. We then went onto a site called Leasing.com and we picked out a couple of cars. Annika picked out a C-Class Mercedes, very nice, you know, £60,000, £70,000 car. I picked out a CLS, so the big granddaddy Merc, and you put the cost per month of leasing the two cars together, and it's 800 quid. Let's have a think about this. We've now got an extra £2,000 a month coming in from the property, and that property is going up in value, and we've now got £800 a month, so we're making an extra £1,200 per month, and we get new cars, luxury cars, Mercedes in our case, for life, for free, at a profit, in fact. If you don't understand that a car is in fact a massive liability and you need to use the appropriate techniques to make sure it's tax efficient, you're probably not going to be wealthy. Because we all need a car, don't we? In one shape or form. We all need a vehicle. And by the way, where am I? I'm at my French Riviera villa. We're a few weeks away now from the end of the refurbishment. There's all sorts of exciting things, but that's a different video for a different day. Anyway, on to secret number two. In a general sense, it's not what you make, it's what you keep. I'm going to say that someone's earning £50,000 a year. Scenario one, you're working away, doing some job that you probably don't like, because most people don't. So you're doing it because you have to. You are doing the 40-40-40, which is 40 hours a week or more, probably a lot more, for 40 years of your life in order to retire on 40% of what you couldn't afford to live on in the first place. How much tax and national insurance are you going to have to pay? Well, this is the take-home salary calculator, so just have a look at this while I'm talking to you. I've just popped in the top box £50,000. You can see there your tax and your national insurance. Now, this surprises most people because the national insurance is nearly as much as your income tax. And it's a different kind of tax, but I don't really differentiate. It's still tax. So from your £50,000, you can see here that you're going to keep just over £38,000. You're going to keep 38 out of 50, which is 76%. So your marginal tax rate is in fact 24%. Okay, so remember that figure. Scenario number two is you've gone and got yourself a few buy-to-let, one or two service apartments that are rent to rent, you haven't even bought them, and you're earning 4 or 5 grand a month, which is roughly the £50,000 a year that you were earning before. How's the tax work out, Paul? Is it better or worse? Now we're going to look at a salary and dividend calculator. I've done it differently. Your own company, your own limited company that you've set up and it's got these rent-to-rents in it or whatever else you've done, what you want to do is you want to pay yourself £12,500 as a salary, and the bulk of your money, the other 37.5, as dividend to give you the same £50,000. How much tax are you going to pay on that? So on your salary, your £12,500, well, nothing, because in the UK you're allowed to earn £12,500 and pay zero income tax. The other 37.5 is dividend, but you are the shareholder. Let's have a look at this dividend calculator. You can earn £1,000 a year each, completely tax-free for you as an individual, of dividend. And then after that, your dividend tax is 8.5%. Now that's very different to 20% income tax, isn't it? And there's no national insurance on this figure either. But the bottom line is that from your £50,000, you actually lose £3,180. Your effective tax rate is just 6%. You've gone from 24% as an employee to 6%. You've got the same income, but you're now going to keep 94% of it instead of 76% of it. And the only reason that you would pay that amount of tax is because you don't know what you're doing. If you're watching this and you're self-employed, you're a brickie, you're a plumber, you're a whatever, and you're running around being self-employed, this is even worse because you don't need to do anything. What you could do is turn your business into a company instead of being self-employed and save shed loads of tax. And number 3, I want to talk to you about savings. This is where you're never ever going to have to worry about money ever again in your life if you do what I'm about to tell you. Savings. I call it the 10% rule. So here's what you need to do. You need to instantly save 10% of whatever it is that you earn. Instantly. If you save what's left after spending, you're going to save nothing. Because if you get your paycheck, right, whatever it is, $2,000 a month, $3,000, I don't care what it is, that doesn't matter. If on the other hand, you save first and then spend what's left after saving, suddenly that 300 quid's going to go in your savings account. There's all sorts of studies that show that human beings are tolerant to a change of plus minus 10%. Because if you haven't quite got enough money to get that takeaway or to go to the pictures or to get that new jacket or whatever it is, you won't do it. But if on the other hand you're thinking, oh well, yeah, I've still got money in my bank account, you will spend it. Do not save what's left after spending, rather spend what's left after saving. Flick that switch in your head. Now, why have I put these 3 secrets in this order? I've just shown you how you could take 2 family cars and get them for free with an income extra of £1,200 a month. I've just shown you, if you're earning £50,000 a year, how you could reduce your marginal tax rate from 24% to 6%. And if I put some numbers around that, that's going to save you more than £8,000 a year. Let's say you just did those first 2 things. Let's say you sold a couple of cars and got a couple of service accommodation units, and it's £1,200 per month. Well, that's £15,000 a year of extra income. And if you then do the tax thing and you drop to a 6% rate of tax instead of 24% rate of tax, not only have you got an extra 15 grand coming in, and you've got no motoring expenses anymore, but you're saving another £10,000 to £15,000 a year, depending on your income, in this model here. So you can increase your income by £30,000, probably by using the assets that you've already got. The third thing that you need to do to bring all this together is you need to learn how to save it. If I take your net income, if we work together and I take your net income from 30k to 60k, and you don't learn how to actually save money first, all you're going to do is spend twice as much money. And you're never going to have any spare, because I can promise you, I've seen it over the years. People start on 30 grand, they get promoted to 40 grand, they get promoted to 50 grand, they get promoted to 60 grand, they get promoted to 100 grand, and their lifestyle just changes. So here's the lesson we all need to learn. If we want a liability, that's fine. If we want a fancy car or a holiday or a watch or something, fine. Buy assets and then use the passive income from those assets to lease the liability. That's the secret. If you want to learn more about how you would distinguish between assets and liabilities, get more assets, get less liabilities, then I want you to read a book I wrote. This book, Wealth Through Property. I've generated enormous wealth. My wife and myself generated multi-millions. I wrote this book giving you the 10 most important lessons. I've talked about 3. There's actually a link below. You hit that link, this book will get sent to you, either, your choice. You want a hard copy like this, we'll send it to you and you can just pay a few quid for the postage and packing, so you can have the book for free. Or if you're happy with the ebook, then no problem at all. We'll just send you the ebook, it's free and there's no postage and packing. In here, this tells you how each and every person in the UK can earn £1 million per year tax-free, completely legitimately using property. The more property you get, the wealthier you get. So it's now a virtuous circle instead of a nightmare circle. Okay, hope you enjoyed this week's edition of Money Matters. My name's Paul Smith, in case you don't know already, from Touchstone Education. And yeah, give us a like, give us a thumbs up, tell us what you think below. Love to hear from you in the comments. You've been wonderful. I've been Paul. See you next time.